then the third option is left from this one. So it means 5 is going to be sold from this 18 per unit value. So 5 multiplied by 18 is 90. So how much is our cost of goods sold here? Because 40 units are sold. So we have 100 plus 350 plus 90. 540. So our cost of goods sold is going to be but if we compare it with our weighted average cost was 600. 40 multiplied by 15, right? So did you see some, changes here? That our costs are less than the average costing. So rest of the amount 20 left. 20 left going to be from 18. So what is the answer? Whereas the weighted average cost of the inventory going to be 300 and weighted average cost of goods sold is going to be 600. So you can compare. Right? So the comparison is like that. If we compare FIFO with the average costing, the FIFO ending inventory or inventory in hand is higher than the average costing. So FIFO inventory in hand cost is going to be higher. It is reflecting the latest prices. While the FIFO cost of goods sold, is less than the average costing. Let me just write it down here like this. FIFO, I think I should write like this. Let me share a whiteboard here. So guys, please note it down. Cost of goods sold of FIFO is less than cost of goods sold average costing. Ending inventory of FIFO is greater than right? So this is the comparison of the average costing versus FIFO. So let's see the solution here. Here we go. So 18 multiplied by 20 is not 324, it is 360. Sorry, my calculation. Sorry about my calculation. So you see here, 540 is the cost of goods sold and 360 is the inventory in hand. So for LIFO, let's take a 15 minutes break and then we start again. Okay guys, welcome back. So everybody please tell me, so do you have clear concept regarding the comparison between average costing and FIFO? Right? So what we have learned before the break is that the cost of goods sold of FIFO is less than the cost of goods sold of average costing. And then we discussed that the ending inventory of FIFO is greater than ending inventory in Average. Of course, I'm talking about the costing, the dollar value, okay? The dollar value, okay? Let's talk about the LIFO, last in, first out. So pay close attention to the word. Last in, it means the latest purchases that we purchase latest. That costing will be assigned in the cost of goods sold first, which means the purchases that we bought latest would be sold out first, right? So let's talk about this. So this is the opposite of FIFO, of course. So the last cost or the latest cost into the inventory go to the cost of goods sold first, which means most recent item purchased are assumed to be sold first. So in that case, the ending inventory will be the oldest one. So let's talk about this in order to understand what we meant by the oldest cost in the ending inventory. So let's continue with the same example. So last in, first out, which means so we sold 40 units, right? We sold 40 units. Here we go. 40 units are sold. So last in, first out. So latest we purchase. So number one, we less this. 18. How much left? Right? At 15 gonna be sold from this 25. So how much inventory left? 10 from here and 10 this. So inventory left here is 10 multiplied by 100 and 10 multiplied by this 14. 100 plus 140, answer is 240, right? And the latest costing is 450. 15 multiplied by 14. What is the answer here? Fifteen multiplied by 14, 210. Here we go. So cost of goods sold 660. So cost of sold gonna be 660 as compared to 540 in FIFO. In average costing 600. And the inventory cost is 300 in average and 360 in FIFO. So look at that, the difference here. So that point that it is the oldest cost in the ending inventory. So you see here the oldest cost in the ending inventory, which is the oldest one here, 10 and 14. 10 and 14 here. So if you want to compare the FIFO inventory with average costing and LIFO inventory with FIFO inventory and average costing, so you see that it is in the middle. Not the middle. So it is the lowest one. So we can say that the LIFO inventory is even less than average costing and FIFO costing, 300 and 360. Whereas the cost of goods sold, it is greater than the FIFO cost of goods sold and average costing. So let's see a very nice calculation here. So you see here, right? That is the difference between the FIFO, LIFO, and average costing. So in order to have a perfect understanding that you guys understand these concepts well. So let's do this illustration. I'm going to be making a breakout room so that we compare the answer here. So I'm going to give you 20 minutes to do this example. And before going to that breakout room, please take out a picture. Okay, I'm going to be creating the breakout room. That's going to be class participation marks. So this is the group activity and everybody must participate in that one. So I suggest that everybody in that group, please share your screen so that everybody can see what's going on. Here we go. Chloe, Ajim, Misha, please accept. Chloe, Misha, please accept. So I'm going to be pausing the video so that everybody finished their work in breakout room, and then we resume the recording.